rates right now?
Right. So, I mean, the last 4 or 5 weeks, it's been up and down, up and then down again. So when this crisis hit, we saw the rates come down probably by about 0.8% for 4 days, roughly.
Right.
Then, as the stock markets, the crash of the stock market, and I will use that word crash because that's what happened. It's since recovered, by the way, not fully, but the rates started to go up because the investors wanted a premium on the rates, so the rates went up. This was kind of hard for most people to understand because we saw the supposed cost of funds go down. Why can't the banks offer a lower rate? Well, they couldn't. It just they didn't have the margins to do it. Their cost of funds had gone up in reality because the investors wanted a premium. Now, we knew that this was going to change. It was going to normalize, and so we've started to see that. So the credit markets have actually there's some confidence now, and just this past week we've started to see the rates begin to come down by about 0.3%. And listen, what are we talking about? We're in the 3% range. Now we're under 3%. It's still very low, the rates. They're going to go down a little bit more, I think, if not in this sort of, cycle, the next 2, 3, 4 weeks, definitely within the next couple of months. We will see some movement downward, but I think it's important to remember that the rates are still really low. I mean, so.
I get a lot of people, it's funny, right? Like right now, there's a lot of speculation about what the real estate market is actually going to be doing. And I certainly have my opinions. I'm not sure, anyone has the real answer to that. But a lot of people are now wondering, right? Should I wait out this crisis before I buy something in the hopes that the market will go down? And in my opinion, I think that depends where you live. So that's a whole other point. But in terms of interest rates, if people are to hold off because they think they're going to get a better deal in 3 or 4 months, do you anticipate rates going back up in the next few months, or what do you think is going to happen there?
Yeah, good question. No, I mean, I answered that very quickly and with confidence. No, the rates are not going to go up for at least a couple of years or longer. We're in a crisis, and the governments are going to make sure that, well, they're going to try to make sure or do everything in their power that we don't have an extended recession or depression, I guess, depending on how you want to look at it.
That's the fear.
Yeah, I think this is short term. I really do. Yeah. But again, I guess it depends who you ask. If you've lost your job and you don't have a job, your world is upside down, understandably so.
Right.
Hopefully some of these emergency measures, financial support measures will go directly towards the consumer, the average Canadian.
Right. Now, do you have any statistics yet on mortgage deferrals? Like, are a lot of people taking advantage of that, or do you know?
Yes, some rough numbers, so forgive me for not being completely accurate with these numbers. I participated in a call with Scotiabank about 2 weeks ago with the chief economist and the president of Scotia Mortgage. And first of all, they were very optimistic that we're going to come out of this, which was great news. And these are two high-level individuals in the bank. When they talk, we should listen. And they're saying we're going to have a comeback in the third quarter of this year. I was very optimistic. And so the stats were hundreds of thousands of people have applied for mortgage deferrals. It's taken a while. If you call your bank today, you're going to be on hold. Trust me, I've been doing this because I had to make some personal transactions, and 2 hours on hold. I won't say who I bank with. I don't want to beat them up more than I already have. But you're going to have to be patient. Everything is moving slower these days. Be patient. But yeah, around there's several hundreds of thousands of people that have applied for the deferral. And I'm sorry, I don't have a number, but it's quite huge.
Yeah, I wondered, it seems like a lot of people I've spoken to and a lot of my clients thought about doing it and then decided against it only because they realize they're going to have to pay interest. And I know it's not a lot of money, but I think for some people it's sort of like, oh, I'm going to have to pay it anyway eventually. So I might as well just, try to keep it going as long as I can, if I can, right? Do my monthly payments. So it'll be interesting to see how that goes over the next couple of months.
Yeah, the interest cost has been blown out of proportion in my mind. I'm going to beat up on the media yet again because I think they deserve it. They're so quick to jump on anything that's negative because I guess it's bad news faster than good news, right? And look, there's no free lunch, but let me explain this so that everybody has a good understanding. If you borrow money, you expect to pay it back, and you expect to pay it back with some interest. Now, if you borrow money and you don't make your payments, I mean, normally you get foreclosed on and you lose your home, but they're not doing that here. They're saying, we're going to give you 6 months of no payments. This is unheard of. We've never seen this before.
Right.
So let's stop beating up on the banks. Yes, they make billions of dollars of profits. I don't like it. I don't get that money. You don't get the money, but it's created a stable environment, banking environment in our country, which is a good thing. So you have to pay interest on the payment that you defer. It's not a lot of money though. It's let's say your payments. I think I did the math. It was $2,000. It worked out to about $30 a year.
Right.
That's not a lot considering, right?
No, it's definitely not a lot considering. I think, yeah, it just really depends on your situation, I suppose. If I guess they tack those payments onto the end for the most part, right? That's what they're doing.
You know what? Yes and no. It's still a gray area, quite frankly. Right. This is all so new. They really haven't formulated a plan. I think at the end of your term, so let's say you have a 5-year term, you're 2 years into it. What happens? Are you supposed to pay that money at the end of the 3 years? Well, yes and no. They're not going to come and expect you to come up with, let's say, again, $2,000 a month times 6 months, $12,000. They're not going to come at the end of 3 years and say, give me the $12,000. That's just not realistic.
Right.
So they're going to work with you to defer those payments for as long as necessary, but you will have to pay it back. And a couple of things. Yeah, you want to pay it back. You don't want to be in debt. And with the rates being low, it's going to be easier to pay it back. That's, I think, the message that we need to get across. So for all you media pessimists, we have a solution. There are options. It's not free, but there is hope, and I think we can get through this.
Mm-hmm. Yeah, don't get me started on what they're saying about real estate prices in the real estate market. It's enough to drive a person crazy. And just, if anyone's paying attention to this right now, I will say that, like, everybody relax. So far, prices have not dropped in the city of Toronto. Now, outside in some of the suburbs, yes. And there are some pockets of the city where they've been a little flat, but certainly we have not seen any major decline. So far, it's really been a huge decline in sales volume, obviously, but the prices are still pretty stable. So that's good news for all of us, despite what I read the craziest things sometimes, people saying, oh yeah, prices are expected to drop 30%, 50%. Like, what? Where's that coming from? Maybe they will, but who knows that right now? We can't talk about that, right?
Well, you bring up a good point, and I wanted to ask you that question. This is your domain. If you read the newspapers, we have house prices have collapsed, and people are going to lose their shirt and default. Well, are prices dropping, Jenelle? Have you seen that?
No. So and I haven't analyzed all markets, right? So, I mean, I do a lot of work in a couple of segments. I will say that in the East End, so I'm talking about in the east end of Toronto, so not outside of Toronto, but E1, 2, and 3. So for those people who understand what that means, it's really from Broadview over to Victoria Park. I analyzed the last 18 days where the average price of a home last year was $1,065,000, and this year for the same time period, so the last 17 days during COVID-19, it was 1.18. So we are still up over $100,000 over last year during the crisis. Now, I don't know whether things will continue that way. All I know is we have to look at the data and not get all swept up and caught up in speculation, right? So your business, my business, it's the same kind of thing. I haven't seen much of a decline in Central either. The West End, no decline really in price, but the inventory, like the sales volume must be down 80%. But what is there is, seems to be ticking along nicely. So let's just, wait and see. I'm trying to give those updates to people every few weeks so they have an idea of what's really happening, as opposed to, just listening to what the speculators are saying, which people love to give the bad news, of course.
And it seems to be like there's a truce, quite frankly, between buyers and sellers.
Yes. Yeah.
Wouldn't you say? Is that fair? I mean,
yeah, it's a funny time. I'll just give one example. I had a little property listed this week in East York. It was a small little house and relatively inexpensive, but I listed it last Wednesday, took offers on Tuesday. I had 75 showings and 22 offers. So to say that nothing's happening in the market is absolutely not true. And I can say that from firsthand experience. And even the showing data, so when we're looking at, this week over last week, the amount of showings through the system are up quite dramatically. And I'm sorry, I don't have the exact percentage, but people are still getting out there. There are still people that need to buy and sell, regardless of the situation, right? And there was I think a quieter period in the first few weeks, but I think now people are saying, okay, this is going on longer. I still need to buy a house, or I still need to sell a home for whatever reason they have. So I think we just need to be patient. That's the name of this whole game. Just see how things go. And I, for one, am quite confident that it will be a nice, healthy fall market for real estate. And I think it just remains to be seen what prices will do. And I don't have a crystal ball, but I feel positive about it. And I'm just basing that strictly on the numbers and the data that I'm looking at. That's pretty much it.
I mean, it's good to hear. And I've seen the same thing from my end. So I'm obviously at the end of that process. People come to me, when they buy, well, pre-approval, then they buy, but they're telling me the same thing. There's a lack of inventory.
Yeah.
And there's really not much movement on price. So yeah. I'm not seeing any drop in real estate, which is, I guess good and bad. Perhaps some of us, if we're buying for the first time, we want the floor, the bottom to fall out and get in. I get it, but that's not happening right now. At least I haven't seen it.
Not yet. But that brings me to another point that I wanted to ask you, is that in terms of mortgages, have you seen any, I know we talked about this last time, but are there any mortgages that aren't, that are falling apart before closing day, so to speak? So because people have lost their jobs or anything like that?
Yes. So we're now a few more weeks into it since we last talked about it. And I have had situations where people have been laid off. They've lost their jobs temporarily. Mm-hmm. Well, hopefully temporarily. In most cases, by the way, it is temporary. There's no work. They can't work. So they're going to be on either the $2,000 emergency benefit that the government's providing, or on employment insurance, whichever is going to give them more money, of course. And if you have been approved, if you bought a house and your mortgage was approved by the lender and you get laid off, I have not seen one instance where a lender's come back and canceled the mortgage.
Okay.
they are going through with it, you're going to be fine. Now, if you enter into a mortgage, let's say for purchase or refinance, or you're transferring it from one institution to another, and they have not confirmed your income, so you remember that, the steps of in an approval is you have to get your income confirmed by the lender, which is giving a job letter or financial statements, depending if you're self-employed. If they haven't gone through the process, and then they find out that your income has changed and you're not receiving, either you've been laid off or something else, then yes, you're in jeopardy of not getting the mortgage. But that's, I think that's to be expected. I don't think that's anything unusual. This happens all the time, but I haven't come across that yet. Thank goodness. I'm sure I will, by the way, and we'll do it as that comes up. There seems to always be a solution, I guess. So there's a way. There's a way.
Okay, good. Now, we were talking a little bit briefly before we started this about the 75% wage subsidy. You had some information about that might be interesting for people to hear about. Do you mind sharing?
Yeah, for sure. So just real quickly, the government has announced all kinds of spending programs. The last crisis was the 2008-9 U.S. subprime mortgage crisis. That's when the U.S. was selling, B and C category mortgages as A category. It was a fraud. They basically perpetrated a fraud, a bunch of bankers, and it cost the world trillions. I mean, it was awful. That cost us in relief about $57 billion. This time, we're already up to about, they've estimated between 170 and $200 billion. So a lot more money.
Yeah.
What they're trying to do is go quickly, and that's why, attack it quickly. That's why they come up with these programs, the emergency money. A little bit of a problem, not to beat up on the government, but the big one for business owners, people that have employees, is they haven't gotten a cent. There was a $40,000 loan that they had, quote unquote, fast tracked. People just got that money this week, by the way, just so you know.
Right.
$40,000, in case you don't know, they don't have to repay it for 2 years. If they do repay it, no interest, and $10,000 is forgiven. It's nice. It helps out. If you have a business where you're paying $10,000 a month rent, it's not that helpful. So the government also came out with a 75% wage subsidy program. So what that means is you can apply to the government to get 75% of your employees' wages covered, up to, I believe, $800. I'm just looking here at the screen, $847 a week, which is significant. That was great news when we heard it. Well, not to let everybody down, but there's some challenges with that. To qualify, well, I'm not an accountant, so I'm getting this from my accountant, by the way, what I'm reading to you. It's a bit ambiguous. You have to show a 15% loss in your gross revenue. But the measuring stick is a bit confusing in that what period are you measuring it from? They've given some options. I won't get into all the technicalities, but effectively your gross revenue has to have fallen by 15%, either month to month, like March to month, March of 2019, etc., or January, February, March average, and then April's average. And if your April is down by 15%, again, you get the wage subsidy. So you can keep your employees employed, and they cover 75%. And the idea of that is that you're going to keep your employees working. It's not costing you the same amount, and it's only costing you 25%. They expect employers to honor that. And by the way, most of them will be happy to do that. I mean, that's a pretty good subsidy.
Yeah.
The challenge with that, if you don't mind me getting a little bit negative, and I'm sorry about that, is that there are penalties if you're proven to not qualify for this. The penalties are interest. There's an actual fine for it. It can be, I think it was either 100,000 or 500,000. So forgive me, this is all kind of still coming through to me right now. Regardless, it's a big number. And prison term, they can actually put you in jail. Now, the other thing that maybe is worse than that, I know you might be thinking, what's worse than jail and $100,000, is the shame game. So the government can actually post your name. They said this, they're going to post the name of people that have been, quote unquote, cheating the system. So cheating the system, yes, anybody that cheats, they should be have to pay the price. Should we take their name and through mud and put it on everybody's Twitter and Facebook and newspapers? Yeah. Well, probably not, because again, if you go through the qualifying process for that, there's no documentation to qualify. You just need to fill out a form. It's an online form, and it's just a questionnaire. And if you get it wrong, you could be in big trouble. Hence, what we've seen already is some companies that could qualify have actually opted to not even bother. They're just going to close their doors for the 4 months and either come back or close altogether, because they're afraid of the fine, the penalty, jail time, and of course, the reputation. It's very strange.
It seems like such ambiguous terms, right? So I can see why people would even make a mistake, and then all of a sudden they're accused of cheating. Like it could be ugly.
Yeah, it's if you go to that website on CRA, and it's only a handful of questions.
Right.
Yeah, you can get it wrong pretty easily, and you better not, because it's CRA, Revenue Canada.
Yeah.
And they have teeth.
Yeah.
They can bite.
Yeah. Okay, that's great to know. Thanks for sharing that. Anything else we should know from a lending standpoint right now that that you think people should know in the next couple of weeks, even before we chat again? Any differences or changes you see coming down?
I guess the only thing to mention is, where rates are, where we expect them to be heading, access to money. So I'll just touch upon that. Access to money is there. There's no shortage. The banks have money and they need to and want to lend it out. So that's a good thing. Yeah. As far as rates go, as I mentioned earlier, they're low and they are on the decline. And that's to be expected because the credit market is normalizing. In other words, they're feeling more confident about where we're going, that we're going to come out of this, and very soon, by the way. So these are all positive things. The thought is that, we are flattening the curve. I don't want to jinx it, but if that's the case, then there's a light right now at the end of the tunnel. And that's what we're seeing in the market. So both in the stock market, as you know, there's some positive news, and also in the credit market. So yeah, we're seeing a lot of a lot of interest by the financial institutions to put money out. So I'm not seeing any problems for people getting money, qualifying. Somehow they're able to buy homes still, as you mentioned. Even with this, you have to fill out. I was going to ask you actually, Jenelle, the COVID questionnaire. What's that all about?
Yeah, it depends on the brokerage, but basically most brokerages are asking anybody who is showing a property to fill out a questionnaire that asks the basic stuff like, have you been in contact with anyone that's had COVID-19? Do you have COVID-19? do you have a cough, a fever, or any symptoms of COVID-19, et cetera. So most people are filling those out, returning them to the listing agent before they actually, show the property. And then there's lots of protocols in place at each particular home if you are going to see it in person. So for example, no double bookings. You can only have one person in at the same time. Everybody must sanitize everything they touch. As a listing agent, people are leaving all the lights on and the cupboards open and things. So when people go in, they don't actually have to touch anything. They can just look around. So, I mean, the important thing I think is it's really can be safe the way we do that. If I've taken people through for showings, it's been, I open the door, I let them walk through, they come out, I go through, I come out, and we leave, right? Nobody touches anything. We wear our mask and gloves. And we're very safe. And so I think that's following those protocols that are put in place. And most people are feeling comfortable with that. If people are not feeling comfortable, which is totally fine, then a lot of properties have really great 3D virtual tours. And so people can really feel like they're in the home looking around. You've seen those virtual tours before. And that makes it easy as well, I think, to really get a sense of what the space is like. So there are a lot of people who may not want to go in person, but may want to look at that, put an offer in on the property, just seeing it virtually, and maybe have a clause in there that before it's finalized, that they would like to go in and actually walk through the property, to see if they do indeed like it. So there's lots of ways to go about it. I mean, we're adapting as an industry. We're working hard to find ways to satisfy everybody. And I think actually it's working because we've got options. You can go in person. You don't have to go in person. You can, if you want to list a property, you don't have to have anybody in your home if you don't want to, but you can if you feel comfortable. So, it's just a bit of everybody's different, and you have to look at each situation independently and just try to do what's best for the client. Long answer.
Well, it's good to know. I mean, that was something that I get asked because sometimes, when a client comes to me before they've spoken to you or to a realtor, how do we see a home? And I kind of knew, but I wasn't quite sure, what the ins and outs were.
The reality is, from a condo perspective, we've been buying condos off of a piece of paper for years, right? That's how all pre-construction is done. So I think for condo buyers, I think it makes it pretty easy to do it virtually. You've already got maybe a sense of the building. You can pretty much see everything you want to in a 3D tour. Homes that may be a little bit more difficult, but some people are doing it, and then other people, like I say, are going out themselves. We have another option, which I have exercised a couple of times now, where if my client doesn't feel comfortable to see the home, then I'll go FaceTime them from there, do a video walkthrough for them, give them a sense of the space, and then if they like it, they can come and take a look later, or we can eliminate it right there. Of course, I don't mind doing that. No realtor would mind doing that in these times. That's something we're happy to do to, satisfy our clients' needs for sure.
Yeah, that's a good idea. I guess technology makes it a little easier.
Yeah, and we'll have to figure it out, right? So I think, I don't know how long this will last. I mean, if it's a few more months, whatever it is, real estate transactions are still going to happen. So, the important thing for people to know is that there are options, right? Whichever way you want to do it. If you have to buy or sell, we'll figure it out. We'll all figure it out. And don't let all of this get in the way of doing what you need to do, I think, is the important part.
Got it. Good.
All right, good. Okay, so thank you so much. I guess we'll wrap it up. And if anybody's interested, Steve's information is on our page. Reach out to any of us on my team or Steve anytime if you have questions. And Steve, if you agree, we'd love to have you back in a couple of weeks.
For sure. If you have me back, thank you. This has been fun. I hope it's informative. Thank you.
Oh, it's informative. Yeah. Thank you so much.